Okay, everyone, welcome back to Hedgtrade. This is a weekly update as of the 25th of August, 2025. So today's weekly update is going to cover the S&P 500, the Nasdaq, Russell, maybe the Dow Jones, and then we're going to go ahead with gold as well as Bitcoin. First things first, what is Hedgtrade? Hedgtrade is an AI-driven quant research platform that really helps provide the some of the evidence when it comes to trading and investing. Hedgetrade has been around for a number of years, however, has been made public as of only this year. It really is a product spin-off of a small hedge fund sitting here in Singapore. So I'm going to go ahead and log into the Hedgetrade platform. And for those who are new to the platform, so this is available to both retail investors as well as institutional investors. Obviously, we have different tiers. The retail tier includes some of the most commonly traded instruments, exactly what we're going to cover today. So I'm gonna first start with the S&P 500. And by the way, this is your overview dashboard where you have access to daily market news, pre-market news, top news, all curated and summarized, classified for you to read quickly. The Hedgtrade platform also sends daily email alerts and notifications based on your preferences, be it a specific symbol or a market in general. It is also a multi-asset class system. So you can see here US indices, global commodities, FX, all the metals, bonds, crypto, and US stocks such as NVDA. In fact, we're going to do NVIDIA if we have a bit more time today. So I want to start with the S&P 500. I'm going to click on US indices where I'm going to find the four underlying indices. So the S&P 500, NASDAQ, Dow Jones, and the Russell. So clearly it's it's on the long side from a momentum perspective, thanks to Mr. Powell last Friday evening that really rocketed the market higher, more than 100 points. But this is history. What is coming up now for this week? This is where the beauty of the Hedgtrade platform comes into play. So for each instrument that you have, Hedgtrade will calculate in real time the technicals, momentum, seasonality. In fact, there's more than 46 quant models that are tied to each ticker in Hedgtrade for more than almost 3,000 instruments calculated in real time, available to you as an investor, as a trader, so that you can form your own some of the evidence. So Hedgtrade is not going to give you a buy or sell, but will give you all the models so that you can make an informed decision, an educated decision, and that decision is yours and yours alone. Yes, we have made money. This is, again, a product spin-off of a hedge fund company in Singapore and made available publicly to different profiles, retail investors, wealth managers, what have you. So without further ado, I'm going to go ahead with the S&P 500. So how do I build the sum of the evidence? Well, first of all, this is AI driven. So we have the aggregated analytics available, and this is what I get by email on a daily basis. So there's going to be a plethora of quant models. So the area wave here in the monthly, weekly, and daily, the seasonality, the Fibonacci numbers, some of the candlestick patterns, additional TAs available. So many of you may say, yeah, but that proves nothing. That's really not showing me the future. Don't forget, guys, it's a statistical bias. So no one knows the future. It's all about building the sum of the evidence so that you have enough of a statistical bias to put a trade with your broker, whether you go long or short with your stop loss, you take profit so that over time you make money. Why? Because it's a process. If you want to make money in the market, you need to follow process. Hedgtrade will give you that process based on your own profile. Every trader, every client, every user of the platform will trade using different time frames, different instruments. Everyone will have their own style. Hedgtrade is available to those different personas. So I could go long, my friend could go short on the same instrument, but because the time frame is different, because the interest is different, we may both be making money. Whether we're long or short is really based on the system that you use. So enough for my rant. So the trading plan for today on the aggregated basis, Hedgtrade here is basically saying in the short term, 1 to 4 weeks, we're basically looking at some bearish conditions, some bearish correction expected with a wave C down. Now that alone as a standalone may not mean too much. Again, this is some of the evidence. So this is where I probably want to look at the daily, the weekly, the monthly, the intraday. For those of you who are swing traders like myself, I want to have proper entries and exits. But then I have visuals. The visuals are very important with Hedgtrade. Again, we have more than 46 quant models available throughout the entire platform across thousands of instruments. This is not something that's made up by the AI platform. So Hedgtrade has different types of AI. We have predictive AI, we have visual AI to recognize candlestick patterns. We also have machine learning and one AI model that's only tied to Hedgtrade that we developed as a team that we called cyclical regression, which is based on supervised learning. This is the only place in the world where you're going to be able to find this AI model. And the result of that is a projection into the future on the daily frame as well as the intraday frame. So the yellow line is the actual. As of this recording, I can tell you that the S&P CFD here is at 64.55. We may be looking, the red line is the projection into the future. No one knows the future. However, from a statistical point of view, there's a bias here for the S&P to retrace back up into the next couple of hours. So this is New York time into 7 p.m. tonight. So let's see if today's trading session is going to be bullish before having a retracement down. But this is intraday. Nothing is really showing me in mid to longer term. And this is, again, coming back to your own profile where different traders will have different styles, different time frames, whether you go long or short on the same instrument. Both of you may be making money. So you have here a plethora of models where you can build the sum of the evidence. So why don't we do that right away for the S&P? So seasonality in the day of month frame is showing me that there's a bias, seasonal bias to go into the middle of September for both of them. There is clearly here a bullish bias, but seasonality is too easy. What about the regression model into the daily? So there's a bit of a bullish to sideways, maybe consolidation. The harmonics intraday, yep, I think we just talked about that. The Elliott wave, we may be looking at maybe some retracement going the next 1 or 2 weeks, but overall, I think longer term, we may be looking at a bullish bias. Why? Because in the monthly analysis, if I'm just going left and right here without confusing the audience, in the monthly time frame, I'm looking at a bullish scenario with, again, my clear entries and exits. So if you're not a trader, but you're rather an investor, the weekly and monthly analysis here is probably what you want to look at. And again, Hedgtrade will send you daily, weekly, and monthly email notifications. For the institutional investors out there, or those who are, again, longer term, they need to invest as a team. Hedgtrade will give you the daily, what we call the IC report, the investment committee report, where you can have the rationale. So AI is not a black box in the context of Hedgtrade. AI is fully explained. It's explainable AI, as we call it. And for you to come up with an explanation as to the bias means that you require a system like Hedgtrade that will compute all of these different quant models. And as of today, as of this weekly report, the S&P 500 is long. I'm not going to go into the rationale, but this is your rationale. Whether you take it or leave it, again, it's about the sum of the evidence. Okay, enough with the S&P. Let's look at the Russell. The Russell's been consolidating, and if we are to get into a bullish mode, we may see an explosion to the upside for the Russell. Now, how do you build, again, the argument or the thesis? How do you support the argument? So this is, again, about looking at the forward-looking model. So coming back to the harmonics, the green line here is the actual. So as of the 25th of August, the Russell is at 2361. The red line is the future projection. So I can see here an upward bias going into the end of September. Again, no one knows the future. However, from a quantitative point of view, this is one of the many other predictive models that I can use to build the sum of the evidence combined with, we just talked about seasonality. Seasonality here giving me also an upward bias. So there you go. That's two arguments for me to stay bullish, albeit maybe with a, yeah, there you go, with a retracement in the intraday chart. Maybe by the next couple of days, I may see some consolidation, some retracement, some profit taking. And then in the regression model, again, some consolidation, the daily consolidation, monthly. Aha, there you go. And the monthly chart, this is where for you guys, the longer term investors, you may find that interesting. The red line, the green line is the actual, the red line is the projection to the future. This is as of today, the 25th of September. That means we may be seeing a pretty significant retracement, but if you're already bullish and you're long term and you're not trading on margin, just ride it. Just ride it along all the way into 2029. So we may be in this bull market for a couple more years, albeit with some pretty significant retracements that may feel like a bear market is coming. No one knows the future. Again, this may be refreshed and it may be a different line going down, going up. These models are refreshed in real time, running 24 hours a day in the monthly time frame. As of today, the supervised learning model using this regression model is showing us a downtrend. But that doesn't mean we don't want to be bullish, right? This is, again, a bullish environment for the Russell. And this is, as of last Friday, this was a short that must have been updated since Friday. But again, this is the rationale as to why you want to go into a certain direction. Okay, so this was the Russell. Let's go into gold. Let's go into gold. So gold has been kind of bearish. And in the short term, we have here a long signal. The investment committee report, there you go. It is a short in the short term for the institutional investors out there. But we're traders. If we're traders, if we're investors, again, we have different time frames, different biases, long or short. But if I'm a trader and I'm looking at this, so the intraday is probably showing me a short bias. If I'm an intraday, if I'm a swing trader, with the Elliott wave here, so today's the 25th of August, there you go. So I may be looking at a short retracement before going back down. In the longer term, I may be, yes, so that may support the argument. The Elliott wave model may support the argument of a bearish signal, but don't get me wrong, longer term, gold is bullish. So if you're an investor, ride it out and let it go up going to 2026. The harmonics model, there you go. Once again, that ticks the boxes for a bit of a bearish to scenario with a downtrend, maybe some consolidation going up and down, some volatility going down into the end of October, beginning of November before resuming higher. If in the intraday, yeah, also not really too dynamic. Seasonality is bullish, which may tie well with another chart that I was looking at earlier about what was that I was looking at? Oh, inflation. Without digressing here, so if we look at the macro models, so on the patterns guides, there's one of the models that is, I believe, the CPI model. So the red line is the actual as of last month. That probably needs to have one more bar for July. But you can see here clearly a model that shows correlation with inflation going up and peaking in 2027 before retracing back down. So that means if you're trading gold, gold is the blue line, gold has historically been correlated with the CPI cycle. So again, I'm digressing. I was talking about gold. In fact, this is still related to gold, but that gives you an idea as to how you can build, again, the sum of the evidence, combining different quant models, different time frames, putting all of that together so that you can form your own educated trading decision, whether to go long or short with the time frame in mind with a clear exit. You don't make money necessarily when you enter a trade, but really when you get out of the trade. Okay, so that was gold. Let's look at crypto. So Hedgtrade will have a number of, as you can see, number of asset types, asset classes, crypto. From a crypto perspective, Hedgtrade supports Bitcoin, Ethereum, and Litecoin. It is template driven. It is data driven. Some of our clients will ask us to add specific instruments. If the underlying data sets are available, it can be added into the Hedgtrade platform. So Bitcoin is a long from an investment, so it is clearly investable at 112,000. Again, this is as of last Friday. Thanks to Jay Powell, things might have changed since then. The daily analysis report is available in the aggregated view, daily, weekly, monthly, again, based on what kind of personality, what kind of persona you have for trading the markets, if you're long-term versus short-term. If you're an intraday trader, like I am, in the daily time frame, hourly time frame, you can have here your entries, your stop loss, your target number 1, target number 2, and what have you. So some of our clients, obviously, they are a bit hesitant. They don't subscribe to Hedgtrade and start putting real money. They're going to start with maybe their own paper trading account for the next couple of days, next couple of weeks, before going ahead and feeling comfortable. But again, Hedgtrade is a system. If you want to make money constantly in the stock market, you need a system. It doesn't have to be Hedgtrade, but Hedgtrade is a system. Elliott wave, so we can see here some consolidation, maybe looking at some retracement going to November. Don't take that as a unique signal. Combine that with other signals, with other quant models. As for this video, I'm sticking to the harmonic. So in the daily time frame, the green line is the actual as of 25th of August. So Bitcoin may not be done. And as far as this bullish trend is concerned, it may be going up into a channel. You can see here going up into the 23rd of September. It looks like there's probably a bit of a channel going up into even November. Now, again, everyone, no one knows the future. Hedgtrade does not know the future. This is a model that's updated in real time based on the cycles that are found in nature. Everyone needs to sleep, everyone needs to eat. The same goes with markets. It's driven by sentiment, and therefore cyclical analysis can be derived. This is an example of a cyclical projection that's done into the future that may be correct. That is always updated in real time. But as of today, as of this recording, we can see a bullish trend going up into September, possibly forming a channel. Seasonality, there you go, right? Good example. It could be going up, it could be going down. Hedgtrade does not, you don't need a yes every time with Hedgtrade. And no in itself is a good answer. Some client was asking, why can I not apply the VWAP strategy on the S&P? It's not making money. Well, Hedgtrade will give you a no. No is an answer. It doesn't have to be yes every time. Again, it's about building the sum of the evidence so that you can make your own informed decision. You got your pivots level, you got your analytics in terms of value at risk volatility, smart money. I was talking about smart money just now. We're going to skip it for this video. Equity curves to backtest some of the models that are available for each of those instruments. Okay, so this was Bitcoin. So Bitcoin is long. The smart money is probably long because, again, this is explainability as far as AI is concerned, and the AI is able to explain, to give you the rationale, the argument as to why it is a long, using those 46 quant models combined with visual AI, Gen AI, predictive AI, machine learning, and cyclical regression, all of that put together. So it makes the complicated simple with visual representation so that you can build, again, the sum of the evidence. Before I end the video, someone asked me about the correlation between the VIX and the S&P 500 going into, and this is already pre-configured, going to September and October. And I thought to myself, why not? So this is an example. If you click on seasonal search, not cyclical search, but the seasonal search, this is where you can combine an instrument against an underlying. So for example, gold or the VIX in that case. And what we are looking at obviously is a no-brainer. Everyone knows that the VIX is inversely correlated to the underlying US indices, the S&P 500 in that case. But you have variations when it comes to seasonality. So you got the annual US election, decennial, the aggregate. So if I look at the US election, I thought there was an interesting correlation this morning. You can see here there's a peak, there's a drop with the tariff announcement, and then it's been going up since then. You can see a little slight retracement before recovering, with the red line being the S&P and topping at least a midterm top going into October. Look at this, guys. This is again about building the sum of the evidence. This is correlated with the other quant models that we were looking at just a few minutes ago. The cyclical regression, seasonality, Elliott wave, liquidity, what have you, right? And by putting all of this together, if all of your models are showing you a bullish bias or bearish bias, this is again how you build your own trading decisions, an educated, well-informed trading decisions, so that if it goes against you, you're still going to sleep because you have a system in place. No one makes money every time. You're going to lose money, but over time, if you make money, that's how you become successful. Again, it's a system. So this model is another good example to build my sum of the evidence. If I want to go long or short on the S&P, it may not be a good place to go long. You can probably trim your long position, re-enter going to September with that retracement at the Elliott wave model show that to us pretty well. And then you just write it up into seasonal strength, right? October, November, December is probably some strength from a seasonality perspective. At least it is for the Russell, for the small caps. All right, so I'm digressing. Hedgtrade has a ton of other models. So you have here U.S. market, long-term, mid-term, short-term. You've got a plethora of assets across multiple asset classes. You've got some standalone models. Oh, NVDA. There you go. Let's finish the video looking at NVIDIA. So this is an example here of all the different instruments that you've got: ETFs, indices, FX, commodities, metals, bond, and so on and so forth. So I'm going to finish the video with NVIDIA. So is it a good time to go long or short? Well, it is a short. From an investment perspective, it is not investable. It is a short. Also, as of last week, as of the 22nd. And why is that? Is Hedgtrade a black box? It just tells me to go short and I should not be asking questions? No, absolutely not. It's all about explainability. AI must be explainable with those 46 quant models that feed into that AI model that is Hedgtrade. This is where you're able to go through, sift through all of that information across different time frames: daily, weekly, monthly, the edit wave. There you go. Here's your probably down swing going to the end of the year, if you just take Elliott wave as a standalone. What about the cyclical regression here, harmonics? There you go. So actually we may not be done. We may still be going up into September for NVIDIA, some sideways consolidation. Why not? Everything's possible. Seasonality wise, there you go. Very supportive of a bullish trend for NVIDIA. So it may not be done yet. And longer term, yeah, okay, so longer term you may not be making money, but this is not what this video is about today. Okay. By the way, this is the traders sentiment, percentage of retail traders that may be long or short on any particular instrument. This is public information. Hedgtrade again will be able to aggregate all of that information that's found in the public domain, just like smart data with commitment of traders data for the CFTC website. That's another example, again, without going left and right. So I'm going to keep it short for today. And until next week, thank you for watching and have a good day.